480 in yesterday's calculation, then you are subject to paying zakat. And if it's lesser than that, then you don't pay zakat. Now, there are some opinions, I wouldn't say that they're majority opinions, but some scholars hold an opinion that if you choose, if there's some valid reason to choose to go with the higher of the two nisab calculations, you can. But inshallah, it's as Sheikh Ahmed mentioned, wealth does not decrease by giving charity, so inshallah, if we use the lesser of the two calculations, that will be better for us. So other than gold, silver, and cattle and the various things Sheikh Ahmed mentioned, what are the other zakatable assets commonplace today? And this is where I think we can really get into a lot of nuances because there are different forms of assets that we hold. Many of them are zakatable, many of them are not zakatable, and how we apply the zakat gets really interesting. So, of course, the easy one is cash and any equivalents to cash, which in today's form would mean cash, or if I have cash in the bank, if I have cash under my mattress, any of those things, money in any form. Also, if you have gold and silver in any form. Now, a lot of the discussion here, just because my teacher is from the Hanafiya, a lot of the opinions are going to lean more towards Hanafi. So per Hanafiya, the gold and silver, whether it's in use or being stored, we include it for zakat calculation purposes. I know at least some madhab, and I don't know if Sheikh Ahmed can tell us which madhab they would look at only gold that is in excess and in storage. If it's in use, they wouldn't include it. But again, to play it safe, to be more conservative, we can include gold and silver that is in use or being stored. Then there are other assets that you'd hold for trade or business. So if you're a business person and you have computers that you're producing and manufacturing and selling, the inventory held for there. The one that a lot of people do get into, practically speaking here, would be real estate. So, mashallah, some brothers, if they're doing well, they might own real estate. And if you're buying it and waiting for it to appreciate and then selling it, that's resale purposes, then you would look at the entire value of that property. We'll get into rental property in the next slide here. Other than that, the one that I think applies to most people and that probably has the most nuance is our savings or our passive assets. Oh, no, it's rock and roll. So that'll be shares that we can buy, ETFs, that's an exchange traded fund, mutual funds, pensions, we talk about receivables as well. So all of these things are actually zakatable. To what extent they're zakatable and how we calculate that, that's crypto. Yeah, Jazakallah for asking that. We will get into crypto and NFTs as well, because they're also essentially zakatable. So what are some non-zakatable assets? So other jewelry besides gold and silver, so diamonds, rubies, those kinds of things, those are non-zakatable. Platinum, which is not the same as white gold. So platinum is not zakatable under the majority opinion, but white gold is a form of gold. It's an alloy of gold, right? So that is zakatable. Items that you use in your daily life, if you have a vehicle and you're driving it, you're using it, if you have a cell phone, a computer, those are things that are not zakatable. So real property, your home that you live in, your principal residence, this is not zakatable. This is not something that you're deriving income from. It's not something that you're intending to resell in the future for a profit. This is something that you're using in your day-to-day life. What about rental property? So rental property is an interesting one. When I did the research and discussed with the scholars, I wasn't sure why the rulings exist the way they do, but basically, if you own a rental property, even though you might in the future sell it for a profit, if your basis for owning that property is actually to rent it out and earn rental income from it, it's the earnings from that rental property that are zakatable, not the entire value of the property itself. But again, what if that rental property is something that you're holding as inventory? Your intent is to resell it later for a profit. Well, then the entire value of that property becomes zakatable. Some other assets, and again, we'll talk about a couple of different classes of assets as we go through, but some other ones that are a little bit more general in nature, money held in trust. So I think Sheikh Ahmed touched on this a little bit earlier, that what if there's money between two parties, and we have to look at who has the genuine ownership of this money. Whoever has the ownership of that money, that's the party who must pay zakat, because at the end of the day, it is still money, again, a cash equivalent. What if you've made a down payment toward a house or some kind of purchase, a purchase of a business, any purchase? That cash that you paid has left your ownership. If I paid a down payment to Sheikh Ahmed for his car, well, that money that I used for the down payment is no longer with me. He has legal right to that money. So it's not part of my zakatable assets. If he's still holding on to that money, it'll be part of his zakatable assets. Similarly, we get into receivables. So these will be various levels of debt that the majority of scholars have discussed, which is what is the likelihood that you'll actually be receiving it, right? So if it's a strong debt, if you're in some kind of business, you've issued an invoice, and you know that you're going to get that money, then that's that receivable amount, that is considered an asset, which is included in your zakat calculation, and you should dispense that immediately as you're doing your zakat. If it's an intermediate debt, so this is something that is not directly related to your business, it's not a service or that you're selling, but rather something incidental. So let's say I sold my car to Sheikh Ahmed, and Sheikh Ahmed said, okay, great, I've taken the car, but I'll pay you for that next month. Well, that is zakatable. I include that in my zakat calculation, but I don't have to dispense the zakat until I've received the money from the sheikh. And then the weak debt is something that is almost in any category below that, where you don't necessarily know the nature of what you're going to receive when you're going to receive it. That is zakatable and dispensable only upon receipt. When we're talking about assets, the other side of that would be liabilities. So there are various items that we would deduct in our zakat calculation. Now, I don't know if anyone's looking at the slides here, but obviously there are some interesting concepts here, and the zakat deductibles really are probably fairly limited when we look at our practical application of it. But just as we include receivables, we should include deductibles or liabilities. So short-term liabilities, these are things that we've received the goods or services for, and we maybe haven't paid for yet, but we fully intend to pay and will pay, we legally have to pay within the next 12 months. That's considered short-term. If you have anything outstanding like that, that is fully deductible. So when Sheikh Hamdan and I were discussing this, again, majority of scholars will say the best thing to do is to just pay that liability, and then rather than it showing as a liability against your zakat, you just are missing the cash from your zakatable assets, right? So short-term liabilities would be fully deductible. Long-term liabilities, these are amounts that you owe on any kind of debt. But you'd, oh, sorry, I'm being told I gotta wear this. Give me a second here. There we go. Yeah, long-term liabilities, these are debts that go beyond 1 year, but when we're looking at what we deduct, we'll only deduct the current portion, so 12 months worth of the payments you have to make. So the big one that comes up when we often have these discussions are mortgage payments. Now, whether you should or shouldn't have a mortgage, that's a different topic. A lot of us know where we stand on that. But despite any discussion on that today, what did the scholars say? So actually, Mufti Taqi Usmani has an opinion that you can deduct 12 months of your mortgage payments against your zakat. But of course, there are some scholars that say your mortgage payments are pertaining to your home. Your home isn't being included in your zakatable assets, so why are we including the mortgage payments that are against your home? So, Allahu Alam, there are various opinions on this one. So shares and stocks. Now, shares and stocks, this is something that we're going to start discussing broadly, and then we're going to kind of focus on the various methods you might hold shares and stocks accounts, and talk about some unique forms of investments as well. So shares or stocks, broadly speaking, there are going to be two methods or two reasons that we hold shares or stocks. So the first one is going to be you're purchasing the shares as a commodity to resell. So meaning to say you're going to buy the share as an investment, you're going to hold it, its inherent value, and then you're going to resell it and make some money when you make that sale. Now that is called a capital gain. You're making a gain on the sale. In addition to that, you might also earn some dividend income. So the zakatable component, you're going to bring in the value of the stock entirely, plus the value of the dividend earned there. The other way to look at this is, what if you're holding the shares of the stock or the shares of the business as a long-term business owner? So you're not necessarily someone that's buying and selling stocks. You're not doing that. But what you're doing is you're buying the shares of a business. Let's say I buy the shares of Google, and now myself as a business owner that owns part of Google. And Google as a company has various assets, so we have to look at the underlying assets they hold. They hold a building. Well, is the building part of zakatable assets? If that building is being used in their day-to-day business, well, it's not necessarily going to be part of the zakatable assets. So if we're taking this second route, shares or stocks held as a long-term investment, then we need to do some further analysis. So a quick and dirty example of that would be the following here. So business assets, generally speaking, are divided into two categories. The first being fixed or long-term assets. So these are going to be things like buildings, machinery, various items that are used in the course of business, and they're non-zakatable items. Then you also have current assets. That's going to be cash, trade inventory if you sell a product, if that business is holding various investments because it has money that's sitting around, those things are going to be zakatable. So if we have a brother named Abdullah, he invests $1,000 into a business, that business might have $800 of current assets. So current assets are things like cash, trade inventory, the zakatable things. That business might also have liabilities, so debts that it owes to people. So the net zakatable assets of this business are $600. Even though Abdullah put in $1,000 into his business, the net zakatable assets are $600. So when Abdullah calculates his zakat, he's not going to take the full $1,000 value of his share of the business. He'll take $600. Plus, if he received any dividends from his share of the business, he'll have to pay zakat on that as well. So that obviously is something that becomes a bit of a challenge to do. And, if you're an investor in today's economy, maybe you have, ETFs, mutual funds with various portfolio of stocks, and you could have hundreds, thousands of companies. How are you going to determine, how are you going to do this calculation that we just quickly did for Abdullah? So this is where, it's challenging, but it is possible, but sometimes it's not practical, right? And there are various apps. So there's some brothers out of Toronto, I think, that have an app called Zoya, which helps you analyze each individual stock, how much of it is zakatable or not. But I think it's Mufti Amjad out of the UK has an opinion that states you can just flatly take 25% of the value of a stock, and that's the proxy for the net zakatable amount. There's another opinion from a scholar out of the US that says that amount should not be 25%, but it should be 40%. And then, there's another situation within corporations as well, and that is if you as an individual or, if you and your spouse have a business, and that business in Canada might be as a small business corporation, as a private corporation. So if there's a situation where you're a sole shareholder or it's truly an independent business where you're just, a small corporation, we should consider how we would dispense the zakat from there. So Again, your corporation might have some current assets on which we have to pay our zakat. So the corporation itself can directly dispense the zakat, which is fine. And if you do that, maybe there's not going to be any detriment to you from a tax perspective. But what if the shareholder personally withdraws the cash from the corporation and then dispenses the zakat? Well, if we do that, then there's tax to pay. So there are actually varying opinions on should you take the pre-tax amount or post-tax amount, when we're looking at how much zakat to pay. And while I'm talking about this in the context of the corporation, this is an even bigger discussion on in a few slides where we talk about RRSPs. So I won't get into further detail here as far as the corporation is concerned, but the same concept will apply to more of us when we look at the RRSPs. Before we get into RRSPs, we can talk a little bit about the more common pension plans. So CPP, this is the Canada Pension Plan. This is a mandatory government pension plan that everybody, if you're employed or self-employed, you contribute to this. You don't have an option, you must contribute to this. Also, this is not something that necessarily you're going to get any benefit out of until you retire. There are some, interesting schemes available now where you can dip into it as early as age 60, even if you're working after. But typically, you're getting this upon retirement. So because this is something that you're mandated to do by the government by law, no matter who your employer is, and the money is inaccessible until retirement, this is only